Let me introduce 3i Infotech Management. So today with us we have Mr. Thompson Nanam, Managing Director and Global CEO, Sax Krishnan, COO, Value Business. We have Varika Rastogi, Company Secretary and Head Legal. From the investor community, we have Mr. Parag Jawar from Knightstone Capital, Chetan Shah from Jeet Capital, Vipul Kumar Shah, he's an HNI. Till now, we have these participants. Later on, they can join us. In this group, most of participants are the first timers. Hence, I would request Thompson to start the meeting with a brief overview of 3i Infotech, and then we will deep dive into Q&A. With this, I will like to hand over call to Thompson. Over to you, Thompson.
Thanks, Vasha, and thanks a lot, everybody for taking the time out to join this call. So what I would do is, in fact, on a lighter note, we had two other very exciting calls yesterday as well. It's also uploaded, and I've been pretty busy on this, So what I would do is, I will try and rewind and play some of this for the benefit of all of you, as Vasha said. The first time maybe you're kind of interacting with us. 3i Infotech, the legacy is almost 30 years. Started way back in 1993, listed in 2005. The 3i used to stand for ICICI. The company had its highs and lows, was almost close to $1 billion in 2008, went in a large inorganic acquisition spree. The typical issues of unable to digest excessive inorganic acquisitions. 3i was a classic example. And the company went into CDR, went into DRS. It has gone its own highs and lows. 2021 March is where the company did a slump sale of the product and platform divisions and became debt-free. And that's when the residual listed company, which had the services business, myself and my team joined the organization to reboot and take this company forward because it's a great entrepreneurship opportunity for all of us to run a listed company in the absence of a promoter as well. And that's a challenge which me and my team had taken up. We've been an exciting journey the last 2 year plus to it's almost 2.5 years now. Because right from getting the organization, in fact, on parity with market, because we were never a services company. But the good news is the last 2 years we've been working very hard towards it. Some of the public domain data available, you'll be able to get a sense of it. Whatever we inherited after the carve-out, we call it the run business, which is predominantly the classic lines of businesses across infrastructure management, in IT infra or business process or application. And what we are now building on par with any other services company, we call it the grow business, which is digital business / next gen business. Sax leads that. These are lines of services which we are on par with any top company in the world. In the sense, we focus on a cloud-first, digital inside, cognitive-powered, edge-ready strategy. Then we also said, for us to kind of accelerate and probably what I call that catch up on the last decade for 3i, because we almost lost a decade from 2011 to 2021. We said the next decade, the digital decade, we're going to set a tough target for ourselves. We said that we'll be $1 billion company by 2030. And I'll try and probably proactively answer that question, because proactively most of them will be curious to understand how is it possible to grow from a 95 million to 100 million to a billion organically. It's impossible. I agree with you, because on a normal services business, even on a compounding rate of 20%, you're not going to reach that. So that's where we wanted to be a kind of a innovator there. And the new 3i stands for incubate, innovate, and invent. That's what the new 3i stands for. And we also started saying that, okay, we are going to brand all our new lines of businesses in services and products and platform under the brand name of New Ray, N-U-R-A, which is cloud first, which is what it's symbolic. And this new company is cloud native, cloud first, cloud led, next gen technologies. So that's how we are trying to differentiate the old world from the new world. But both the worlds coexist. The old world still pays our bills. The new world is the new revenue mix change which which we are working on to change the mix of businesses. So we set a goal for $1 billion, and then say beyond the normal services business, we also wanted to focus on alternate lines of businesses. So some of the products we have developed as well, Nure, Sase, we want to do it a B2B to B, and then we also talked about the B2B to C, which is we also won the RailTel project, and Sachs will explain a little more in details on that. So B2B to C project is a massive force multiplier if you can visualize it. We are talking about 800 million, potential Bharat as a target customer, where we want to monetize the Wi-Fi along with RailTel in 6,800 stations. And this also is a great example of our technology, where we are now from an strategy intent to execution. We are looking at, edge cloud is applicable in this. Edge application, we are developing a super app. Edge analytics, we are looking at real-time location-based analytics, micro-segmenting. Edge security becomes extremely important from a data privacy and a protection world where we live in today. And broadly, if you look at it, and also we have also invested, and necessity is the mother of all invention. We brought in talent in the form of entrepreneur and resident entrepreneurs, gave them the freedom to innovate and build new products and platform. The good news is some of the Nure companies, especially the Nure Future Tech, incubated in IIT Madras, has already they are revenue generating, got their own products and platforms and IPs. They also not only sell their own products and platforms and valuation of that, because there we are typically like a startup ecosystem. We are now looking for a pre-series A, where 3i you can call it the seed investor or early stage. But we are also, it's very intrusive, and where we're incubating it. They work very closely with the services groups like what Sachs leads, and they drive the next gen services which are powered by these products. So broadly, that's where it is. If you look at it on a high level, maybe I'll pause here and then maybe I can start taking some questions and we can make it more interactive.
Yeah, sure. So I would ask participants to raise their hand so that they can ask the questions to management. So the first question is coming from Parag. Parag, you can unmute yourself and ask questions.
Parag, we can't hear you.
Yeah, we can't hear you. The voice is very low. I mean, it's not able to hear us.
Better now?
Can you just come nearby?
Is it better?
Yes.
Yes, much better.
So thanks Thompson for taking time out and explaining. This is the first meeting I had with the company, so thanks for giving the background. Could you also explain about the team? How much of that is new, how much of that is old, and where has the team come from? And also in the near term, next couple of years, what are going to be the focus areas? If you could give some background there.
Yeah, absolutely. So definitely, if you look at entire what we call as the run business, which are traditional lines of businesses, which is old infrastructure management or old tech support, business process services. The broad mix, if you look at it, between what we call as professional services, enterprise services, which is the traditional volume or run businesses, and the next gen or the digital business, which is the more high margin business, if you look at it. We would say out of 6,000 people today, we'll be around 4,500 belongs to the old and 1,500 towards the new ones we are building. And in fact, our segment reportings are starting to bear that. If you look at our reports, you'll start seeing that. Like say cloud first is very clearly a new line of business. In fact, in the coming quarters, we'll start doing more micro-segmented reporting, where it'll be very easy, because that's a clear focus area where we want to see how we are changing the revenue mix. Because obviously the old line of business are not very profitable for us. They are relatively low margin. They still pay our bills, but that may not be really sufficient for us to keep investing in the new lines, because new lines we need to front load the investments. So that's what we are doing today. In fact, the 1 year we front loaded, but now we are slowly starting to get the results of all this. The second question, which leads into your the question is, what is the focus areas? So the focus areas has been on lines of business where we want to be on parity or a challenger in the market. One is definitely cloud first, where we are focusing on, Oracle COE as a very important, arrowhead. In fact, Gartner has just listed us in the top 10 vendors for OCI cloud managed services. We have been known as a testing provider. We are now getting into more automated testing and cognitive AI testing. Even Gartner has put us into pure play testing recently. I'm just saying as an example. These are mainstream the way I look at it. And if you look at cloud, the entire stuff, maybe I'll also allow Sachs to expand on that, because and beyond that, if you look at it, we are also focusing on next gen services, which is, as I said, focused on edge computing, predominantly into prescriptive analytics, next best action. And these are products and platforms we are building, and which will also either be sold as products and platforms or it will be sold as services as well, because there's a convergence which is happening broadly. Maybe Sachs, you want to probably elaborate on the digital business and next gen a little more for everybody's benefit here.
Absolutely. Thank you so much, Thompson, and thanks again for the opportunity to talk to you guys. So like Thompson mentioned, when we took over, I'll just rewind it a few seconds. Obviously we were in the same bracket as IT service companies, right? And maybe 2 decades old in terms of trying to catch up. So that's not the game that we wanted to play. And all of us are guilty as Charles Thompson. We all run big banners, like he's run Xavier and HP and Vodafone, and I've run HCL and Atos and Tech Mahindra. So we all come from building these big pyramids, and I know what it takes. And I don't think the time is right or the market is wanting for another player to be in the mix. So we said, what do we do differently? What we found was this lack of orchestration that's in the digital transformation space was something that needs to get serviced. And I meant orchestration because digital transformation is a fabric, right? It can't just be one monolithic solution. It's a fabric. So how do you bring in cloud? How do you bring in applications that fit the cloud? How do you bring in data that is cleansed and optimized to be put in cloud? And how do you securitize all these 3 ecosystems so that it's not vulnerable? And that simple proposition requires very a mile wide and an inch deep, if you may, or the other way around, depending on the situation, orchestration. So that's what we wanted to be. So we are digital transformation orchestrators. That's the first thing in our digital business, right? We bring in best of breed, whether it is our applications, we bet on Oracle. Not to say that we won't work on Azure or any other bespoke application, but or Microsoft Dynamics applications. But Oracle, we took a proactive investment because it's simple logic: 33,000 customers, 7,000 moved to cloud, 25,000 yet to move to cloud. About 5,000 of them will experiment with Snowflake and Postgres and all the in-cloud databases. About 20,000 of them have no place to go. Why? Because the databases are invested in Oracle. Their applications are invested in Oracle. It's not easy for them to leave Oracle. It's only Oracle that needs to make them easy, which they are. So we predict a gold rush, a deluge, if you may, of customers moving to OCI. When they do that, they need to also optimize applications. So it fits perfectly in our narrative of cloud first, applications fit for cloud, data ready in cloud to be leveraged for insights. So that's our stack, if you may. And of course, this is supported by an enterprise infrastructure stack. On top of it, there's a cloud, which is an innovative cloud stack where we do some secret sauce and hypervisor to reduce the cloud consumption get-go, right? Without even re-engineering applications to reduce the cloud consumption by almost 17 to 20%. We are delivering that today to customers. So that's our stack that we take in the digital business ecosystem, and we build things around it. I didn't talk about insights and cognitive and AI ML computing, which we're also doing, as an extension to data. So one is, of course, a lot of our customers, since we play in the tier 2 market space, we consciously decided that we don't want to be in the tier 1 because there are enough people servicing that, right? If I also stand behind them, I'm probably 5th or 6th in the line. By the time I get my chance, we may not be exist. So we said they're a tier 2 market which requires the same level of expertise which they're not probably accessing. At the same time, their needs are a little bit more lower in terms of the stack. So we give them more fundamental stuff like infrastructure innovation, digital infrastructure management services, then take them to cloud, then take them to applications. So that's working well for us, including cognitive and AI.
Thanks. That helps. Just one follow-up on that. So on the team front, are you fully built out for your grow business, the digital and cloud that you're talking about, or it'll be more like
So
as you go, so team will keep on getting added.
are you referring to the management team?
Yeah, more on the middle management.
Yeah.
Yeah.
See, like I'll try and answer that also. See, from a strategic perspective, we went ahead and front loaded this investment because that's a necessity for us to even, that was cost of doing business, as simple as that. So we have built these practices, we built these COEs. I'll give you a small example. We went ahead and built a Oracle COE, okay, without any business, okay, proactively in a tier 3 city in Tamil Nadu, as simple as that. I'll give an example. All of them got certified in Oracle today. If you look at it, one of the, even Oracle was surprised with the percentage of which these guys are, certified themselves with, and all of them are billable today. So we now kind of graduated that proactively. Let's say I'll give a simple example. IIT Tech Park Madras, I have 75 data scientists, 15 PhDs. Okay, so that's the size of investments we've made. Now they are all generating revenue. So for us, that front loading, building competency, capability, converting intent, vaporware to product and prototypes, we're already there, if you're asking that question. Now it's to scale.
Thank you. That helps.
That's a good question also, if I may add to that, Parag, is that, Thompson mentioned this, most of the market looks at us and challenges us saying, would you be able to do from 100 to 1 billion? Just give me 1 second, sorry. I'm sorry, I'm joining you from West Africa from a hotel room, so sorry for that. The way to do that is obviously you have multiple engines of growth. So when I mentioned our stack, each of these stack is worth in the market today by just accessing maybe a couple of percentage points of market share, worth a couple of $100 million, whether it's cloud, whether it's applications in Oracle, OCI, or it's data. These are massive spaces, and we don't need the whole space, right? We need just a niche space that will give us a couple of $100 million per unit, per engine of growth. So we've got leaders to run each of these engines, both the old engines, as we call it, professional services, enterprise services, as well as digital business, and within that cloud, within that future tech or cognitive or AI, within that applications, analytics, and automation. So we've got leaders in each of these places, both on rung one, as in Thompson's L1, which like me, as well as my L1s, right? So we've got that figured out. So in terms of scalability. And each of these leaders are then growing their businesses to reach that $1 billion mark, just to give you the perspective.
Thanks for the detail.
Thank you, Parag. The next question is coming from Samir Gupta. Samir Gupta, please unmute yourself and you can ask the question.
Thank you for the opportunity. Continuing with the previous focus on the next generation business, that is cloud, AI. So in terms of revenue or percentage of revenue, how far have you reached out of our total revenue?
If you look at it, that's why I'm saying this Q2 will be we are working on a more deep segmented reporting. But if you look at even our Q1 numbers and we started reporting, say, for example, Cloud First is one of the new lines, which is growing, pretty fast. If you look at it on a percentage level for a year, we should probably hit, I think, Sachs, we might hit even 8% of our revenue. Yeah, because this was absolutely grounds up. We had no revenues 2 years ago, zero. When I came, I think there are 2 people. I think today there are 140 people in that business unit. As a simple example, right? As an example.
So just to add, I'm sorry to interject. Yeah, sorry.
Go ahead.
It's unfair to probably ask that question of a base which is legacy. Right, because these are startups. So I don't know if there's a right way to measure in terms of maybe we were a year ago and maybe we are today, because that gives you a perspective of growth, penetration, scale, and validity of the business's proposition. Right, as compared to saying, look, I'm going to be because I've got professional services and enterprise services been running for many years, many decades, in fact.
Yeah.
So to compete with that and say, so the 8% may not look very significant when you look at it from that perspective. But if you look at it from where we were in terms of 2 years ago, a year ago, and look at the growth, that gives you a better perspective.
Yeah, no, absolutely. Just to give a numbers also, if you look at it, when we took over, the services business was 608. Okay, and we exited 730, 729 last year, and we are targeting at least 820 this year, without even RailTel. So broadly, if you look at the change mix, value mix, if you look at it, Saks is running with a number of 225 crores. So that'll answer your question fundamentally, which is the entire value or the new lines of businesses.
Okay. And this digital business, is it domestic focused or is it for the US market?
See, these are all global focuses. Right now, if you look at it, we are also doing for US, for example. See, all of them are global. See, we have US is a big territory. We are changing our mix from our run and grow there. We have US big stories on digital transformation in credit unions, in cognitive computing, things like that. And of course, in India, Middle East is our important markets. And of course, Thailand and Malaysia also are other markets.
Okay. Can you share some more about the super app that you have developed? Is it for a client or is this a platform that we have developed?
No, this I think probably, Saks, you want to probably, I think, I spoke about the super app in my introduction, because edge applications, as I said, the biggest example of that is where we have got this deal with RailTel, where it's a joint venture. It's an RFP where it's a revenue share between RailTel and 3i, where we are helping them monetize their Wi-Fi free, which is provided in the platforms for around 6,800 stations. As part of the journey of monetization, we are also developing a super app. So that's phase 2. Probably Saks, you can talk about it. I think, Saks also leads the RailTel business. We have branded it as New Ray Bharat Network. You can see it in its public domain. It's a separate entity, a subsidiary. And because this business itself has a potential to grow to 1,000 crores. So maybe Saks, you want to explain now?
Yeah, please. So multiple dimensions of impact, right? First of all, it's a quasi-private public partnership, which always has its advantages and challenges. The second aspect of this is the scale. I think we briefly mentioned 6,108 stations. So if you look at Kanyakumari to Kashmir and Guwahati to Goa, there are 6,108 stations covering 68,000 kilometers with 23 million travelers every day, out of which about 1.5 million travelers today log in to what is called Wi-Fi, right? It is paid or free. So the fundamental objective, let's be clear about this, is not to come up with another Facebook. It's not to come up with another super app just for the sake of super app. Yeah, the objective was always to connect Bharat to India, which means advertisers and producers of products and services in India who can reach out to Bharat. In the process, of course, we monetize, right? Let's be very clear. We are in the business of monetization. And so is RailTel. No questions about it. And that's the partnership because we have a revenue share as it's publicly known. Now, how do you monetize? Now you have to have a property on which you monetize, right? You have a property which is the conduit, which is the connection, which is the platform, which engages and connects these two ecosystems. And that platform, the first platform of that is what we call as captive portal, which is a smaller app, if you may, which is just lies on the mobile, receives the login users and gets them to the internet. While it receives and gets them to the internet, that space, that journey, that time that they take from getting into the internet is what we use to monetize because it's captive eyeballs. So the fundamental differentiation here is there's no other platform, as far as I know, in Asia, I should probably check the world, which provides such a large scale of captive eyeballs. What I mean by that is when you're in front of a TV, you can fast forward the ad. When you're in front of a hoarding, you may look at your text message phone and not look at the hoarding. If you're going to display ad, the display ad moves before you blink your eye. So your captive eyeballness is very, very small or unpredictable or uncertain in every other medium. This is the only medium that we know of which gives you captive eyeballs. So even at the basic level, right, as in the captive portal level. And so huge platform for monetization as well as connecting, again, like I said, producers, advertisers to the market. The second property of this is a much more evolved property of this is what is called the super app. Now, the super app initially would cater to the ecosystem of traveling because that's where you're getting the users from. The 23 million travelers is what your captive eyeballs are. So once you get them, and you need to obviously provide things, including integration with IRCTC, including integration with maybe other ancillary services like booking taxis, cabs, cars, coolies, porter system, food. All of that gets engulfed into this thing called super app. The other thing the super app does is so two things, right? One is services like these, which we provide, which are in the traveling ecosystem, which has some propensity for consumption. The second we use the super app is to give content. Now this content is a very purposed content. It is not general content, it's purposed content, which means it's either sachets, OTT sachets, right? Half an hour packages of OTT. Today you have OTT packages for a month or 3 months or 1 year. We offer them 30 minutes OTT packages. And for that, we have a blockchain-based OTT orchestration platform that we've built. So this is, deep tech, right? We've built blockchain-based because it's easy with blockchain to deliver and monitor. So that's a second, aspect of the super app where we do purpose content, not just OTT, but also edutainment, right? Education content. I mean, look at the possibility of Byju's to Bharat. Right, and I'm not saying Byju's itself, but Byju's like service to Bharat at a more affordable price. Again, 30-minute slots, 30-minute packages, things like that. So that's the purpose and the intent of the super app. Like anything else, super app is an evolving thing. It doesn't happen on a Monday morning. We need to first transition the users from logins that they have today to the super app. Now, obviously, there's a lot of competing space in the super app. Why would they stick to this super app, right? So that means we need to provide them more purposeful content, like I said, to Bharat, to rural, and we are purposing that. So that's the kind of background behind the super app.
And just one more thing, just to add, Sachs, is the phase 3 would be like what you said. It's India to Bharat, Bharat to Bharat, enable and ultimately probably interface with ONDC platform. And can we create this the platform of choice for e-commerce or an alternate for an Amazon or a Flipkart for Bharat? I think that's a third phase if I look at it.
Yeah.
Thanks. That's clear now. So if I understand correctly, it's for the rail travelers who are traveling by train. To access the free Wi-Fi, they have to log in using the service provided by 3i.
That's right. Even now, you go to any station, it is offered. Right now, even if you go, I don't know, we have the Gadar ad running. It's a first customer. We have also privileged to have our Prime Minister's Chandra quiz running there. I'm just saying as an example. This is in the platform which is offered where we monetize this. But once the super app is developed, it also helps us to go beyond the platform. I think that's what Sachs was saying. That's a phase 2. So you're not even constrained to the platform because that will be opening up even more larger opportunity.
What is the terms, the revenue share with the RailTel for this?
Yeah, the revenue share is, it's 60-40 or a minimum guarantee of 14 crores, whichever is greater from a RailTel's perspective. That's where it is.
For 40% rate.
Yeah, 40% or for 14 crores, whichever is greater.
Whichever is.
Okay, thanks. I'll come back.
Yeah.
Thank you, Samir. I would ask participants to raise their hands to ask questions. The next question is coming from Vipul Kumar Shah. Please unmute yourself and ask the question.
Yeah, thanks for the opportunity. So, carrying forward from the previous participant's question, so what is the capex for this RailTel project?
Yeah. So
good question.
If you look at it, it's a great question because the capex investments are predominantly in the tech, for example, the core technology in terms of the advertisement servers and all that stuff from that perspective. It is also to fortify the endpoints in cybersecurity and SASE infrastructure, which is there, if you look at it. So these are some of the capex elements of it. But the good news on this, Vipul, is, if you look at it, this business, unlike the traditional services business, is a massive nonlinear model because once you hit the break even, this is massive contribution to the bottom line in a nonlinear way. So that's why this for us, once we cross the break even. So next question will be what will be a break even? Our break even will be per year would be maybe 26 crores because 14 crores is a minimum guarantee and 12 crores is our OPEX, and then 26 crores is our break-even point.
So what is the current run rate of revenue per annum?
See, this is a new project. It's a new project. We won it in December. It took 6 months for us. We launched it commercially in Q2 right now. And right now we are getting our first customers because it's a massive one. Right? This is not a easy stuff. Testing it, concurrent thing. The size and scale of this implementation is very massive. But the good news is we are live. It's commercial ready. We are paying customers. The funnel is building. Simple. Our run rate for us today, very simple, Vipul, which I chase the team is per day we have to hit 20 lakhs because 15 to 20 lakhs unique login users. Our target is to earn 1 rupee per person per day. As simple as that.
So put differently, for 24, 25, what is your expectation of revenue from this retail business, sir?
See, the retail business is because for us, for the next financial year, if you look at it, we are targeting almost close to 80, 90 crores. Because it's once the scale hits, because this is very massive, as I said. And even this year, we are now targeting hit at least, our stated target is to break even, which is 27 crores. So this year's target itself, which we are running. Though we are little behind, but we have 6 months still to hit the numbers for this project. But next year, we are targeting 100 crores in a very conservative. And for your information, already we have a pre-revenue valuation of this as 140 crores. Only for the subsidiary. Nure Bharat Network is valued at 140 crores pre-revenue right now.
Okay, but sir, means your challenge is at net level you are incurring losses. So at on one hand you have to invest in new age businesses like this, and on the second hand you are not generating enough cash. So how do you balance this out?
No, absolutely. That is the challenge which we all face as these entrepreneurs. It's a very, very great question because for us, we are trying to do all this with what we inherited. We don't have, any massive financial backing. So for us right now is with whatever finances we have kind of set this up. So immediately Nure Bharat Network, we will be that's why I'm saying we are going to kind of try and raise capital at the subsidiary level. That's a strategy approved by the board as well, because that's the only way we can fund this massive mega program. Our current P&L cannot support it beyond that. So that is very, very clear. And also the current P&L also, we are continuously trying to see how we can optimize our cost, make it even leaner, meaner, and fitter, because that has to keep funding our growth engines as well as also some of these big bets we have made as well. So to your point, obviously we are raising, we are looking for raise debt based on some of our fixed assets. If you look at our balance sheet, we have fixed assets of our properties in Vashi, which is almost worth 125 crores. We are looking to raise debt there and looking to raise equity in some of the subsidiaries as well. So that's our strategy.
But yours is a loss-making entity, and if you raise the debt, then you will be paying interest over and above the losses. So, do you think it's a viable strategy in long term?
See, today, if you look at it, it's a great question. See, for us, what happens is we have no choice if you look at it. As part of the slump sale, if you see some of our narratives also, slump sales, we were supposed to get 50 crores for the properties, but it didn't go on, and we got the properties back. And so that is a particular shortage. So one is, even if we don't raise debt, we'll monetize it. We'll do a sell and lease as well and raise capital. So depending on whichever is possible, our first priority will be sell and lease the properties rather than debt as a preferred, and then raise capital in our subsidiaries.
So before I joined the queue, your joint venture with IIT Madras. So I couldn't completely understand how it works. Would you repeat how it?
No, just to clarify, it's not a joint venture. See, IIT Madras runs a massive research park, which is a startup incubator, and we have a resident entrepreneur program. So one of our cutting edge next generation technologies, we call it New Future Tech, which is focused on cognitive computing, AI, and deep tech in prescriptive and express action. That is incubated there. And there we have almost close to 75 odd data scientists and AI ML specialists where we are incubated within IT Tech Park. We leverage the IT Tech Park expertise there, in building. For example, we are building a 5G lab as a service where they are advising us. So that is the model. And now that has gone from R&D into, products and platforms are also for are commercially ready and now generating revenue as well.
So again, what should be the capex we have done for that?
So the capex, if you see in our books already, we have capitalized some of the products. If you look at it over the period of last 2 years, we have invested 38 crores. Not only for that, for all the other products and platform developments. Because if you look at it right now, we got in the Gartner as well. Our testing platform has been recognized by Gartner as one of the top 10. So similarly, we have done these various products and platforms because we sold all our products and platforms, Mr. Shah, as you know, in the slum sale. So even parallelly, we have been investing in these new products and platforms for us to be more relevant and be a challenger. And now slowly, each one of them are now helping us drive revenues with a better profitability. And each one of them also, what we have done. Yeah, sorry. Sorry, go ahead.
Yeah, go ahead, finish your thought. Sorry.
Yeah. Now, what I'm saying is we have also structured in such a way they are like subsidiaries also. For example, New Future Tech is a subsidiary because then it also lends, other, strategic partners or investors to join hands with us in these subsidiaries. So that's the whole thinking where we can probably, create more value for some of these products and platforms.
It's also fortuitous that the slum sale did take all the products out because they were legacy products. The same meeting, the question would have been slightly different, equally challenging to answer as to how do you modernize and transform these legacy products into getting them. That would have probably required more capex. So for us, it's actually, we look at it more as an opportunity that we are now investing in products which are new age, that are required for the future, that are required now and for the future. So that gives us a more mileage, more non-linear period window of generating revenue than if we had the same old legacy products and tried to sweat them more.
Okay, sir, I'll join the queue. Thank you.
Hey, thank you.
Thank you, Vipul. I would ask participants to raise their hands to ask the questions. So next question is coming from Chetan. Chetan, you can unmute yourself.
Yeah, hi. Thanks for your time and appreciate all your answers. Just couple of clarifications. So I was just going through my notes when I met you a couple of years back, and that time we have just concluded our sale of product division and to Apex partner, and we were kind of formalizing our 2030 vision plan and all. And in that, you have kind of given us a target that one third revenue will come from India, from a traditional international services, and rest will come from a new digital services business. And that time also you mentioned me that we'll be able to reach in a 3 years time frame about a billion rupee of EBITDA. That was a goal, and few things happened here and there in terms of cost part and also from a client side. But if you can give us some roadmap in the sense your big picture goal of $1 billion of revenue, what we want to achieve, and the mix which you mentioned to me 2 years back. This was also on a September, exactly 2 years back when we met you, sir. So just trying to get a sense that how is your journey in last 2 years? Did you found any reason to tweak any of your assumptions which you have mentioned in the past? And the most important part is, most of the IT companies try to focus on a global market, but given the growth potential, what we see in India also as of now, both in terms of digital and Indian entrepreneur and corporates capability and ability to spend in IT is something not many people speak about. I think Sachs spoke about that briefly, explaining the business and the opportunity over there. But on a services side, if you can give us some sense, how do you see the whole geographical landscape getting changed over a period of time? I believe that can India can become a growth driver in next 5 years rather than depend on a Western world. I know it's asking too much in a one question, but if you can
No,
give
no, I'll
some
try and
sense,
answer
I'll
that.
be very, very, very thankful, sir. Very
Yeah,
thankful.
it's a great question. First of all, thanks a lot. Because you reminded me 2 years ago what we spoke as well. It's a kind of it helps us to stay grounded. So what I will do is first I will clarify some of those things. You asked a very important point, and thanks for noting it so keenly and refreshing our memories as well. So if you look at it, I agree with you. So when we come into the new organization, and we have this we had to set a north star, kind of set it, bring the organization together to drive towards that. So that's the objective where we did that. And of course, if you see the first year, if you look at it, Chetan, we had a lot of exceptional costs hitting us because post the slum sale, till the dust settles down, it took 1 year for so many exceptional items hitting us, like any slum sale. If all of us, let's be very clear about it. You are left with all the GA costs. The definition of a slum sale is that, right? Somebody takes a slum sale, he takes what he wants, leaves what he doesn't want. It's as simple as that, correct? So the year one was probably getting the baseline, right? On a lighter note, maybe I was too ambitious in entrepreneurship when I came in, to get together. So then reality sets in the first 2 quarters, okay? So probably we calibrated that. If you ask me, maybe I'm down 1 year because of these exceptional baselining issues, but we are not given up on anything when we are going. So for example, I told you I will hit 1,000 crores in 3 years. If you remember my opening comments, you can take it. 1,000 crores, 100 crores, 3 years. I made that statement. I'm not going away from it. We are still working towards it. The only thing we almost lost a year, to be very honest. The first year was we took. Now, if you start from there, I can still tell you year 4, we will hit that number. We will hit the number. We are not running away. Okay, we are not running away from that. We will hit that number. What I told you. You can hold me for that in the next call. I'm telling you. I will make that happen. The second thing, you reminded me a very interesting part. You said, how will I hit that $1 billion in a different way? I explained talking about the B2B services, B2B2B, and B2B2C. The other revenue cut I spoke about, and thanks for reminding that, and he very well articulated it. He said, my current enterprise services will continue. It's not going to die off. Maybe it will be there. It might be 1/3. The next generation and all the modern digital stuff will be 1/3. And India as a geography will be 1/3. I think it's very, very important. And if you look at our numbers recently, Chetan, we have been doing that. India has been a big hit for us. We have been winning deals. Even yesterday, we won a large deal. You can just look at the thing. We won a large deal yesterday. So we are on a roll in India. If you look at it, at least in the infrastructure management space, we are winning. Whether it is data centers or all the IT outsourcing from an infrastructure perspective, we are winning. We need to take that to the application and the digital side. That's our focus in India. If you look at it. So we are very confident that way that India story is going to be very massive for all of us. And definitely, I still believe that 1/3 will come from India, just doing India to India business. That's point number one. The second thing is the ability to infuse AI, technology, and cognitive into India. We can still drive up the profits. So I have that's why I keep challenging the teams. You cannot tell me that India can never be a high profit margin geography. That's no longer the fact, because with this technology enhancement which is happening, we can still deliver higher margins, even in India, in a domestic market. That is one take. From a global perspective, if you look at it, global trends are all changing. It's all changing dramatically, as you rightly said. If you look at the Western world, which drove the typical outsourcing spends all these years, all of us have done this for last 20 years, 25 years, creating jobs in India. All our CVs read, what is the number of jobs you created in India? That's how it is. So I think that low cost labor arbitrage model is dying away. If you look at it, I'm not saying the offshore model is dying away. Customers are asking more, value accretive models. which are aligned to outcomes and outputs. Very simple. So it's moving away from pure cost arbitrage. That's dead business. Let's be very clear about it. So there is still a business for India, offshoring, where there are a set of customers who want that. But what we are equally seeing, I'll also allow Sachs to do that after I close that, in the market is there's a clear shift happening, what I call the reversing of pyramid. Now, customers are saying, powered by technology, infused by AI, can you build onshore hubs for the lower end jobs? Because I don't need 100 people in Bangalore anymore. Can I do the same job with 10 people in a tier 3 city in US? But India will have, if you reverse the pyramid, the knowledge hub continues to be in India. So the models are changing, very, very clearly. Maybe, Sachs, you want to kind of add a few from a global perspective, because you also keep talking to customers across the world. Yeah.
Absolutely. So the India fatigue is setting in clearly, right? And I think guilty as charged, maybe, because all of us have built this industry, or at least be part of the building of the industry, that we have created a huge pyramid of instruction takers. And to reverse that pyramid, you need technology. You can't just transform people and say suddenly you become design thinking. Not the entire pyramid can become design thinking. So therefore, you need some other non-disruptive, invasive, non-linear dimension to be brought in, which is tech. And in that tech also, AI also, generative AI is becoming a big leverage to be able to democratize knowledge. See, what has happened with generative AI is that knowledge is always power, right? Especially in the information technology industry, as the name suggests, information technology. So if you democratize that, suddenly the pyramid changes. Just by democratizing knowledge, you can reverse the pyramid, right? Now you take the reverse pyramid and start deploying it in local regions, because that's what they are missing today, both in terms of the political narrative, the economic narrative, and the social narrative. Each of these countries, you'd go to UK, you go to US, of course, you go to even other Asia Pacific countries. Middle East has always been a little more, closer to shore, kind of a syndrome. But these two other large geographies, markets, the Western markets, US and UK, are desperately looking for. And at the minute we go and say this to any government, the attraction becomes even more. We are getting much more. So it's not just the organizations which are requiring to change the pyramid. There is also the possibility of governments helping us, incentivizing us to be able to present, because we are rebuilding so-called what got diluted in these geographies. So that's a huge narrative. It's a very, very compelling, powerful narrative that takes us to a different dimension of game.
And also, just to summarize that, Chetan, one important point for us as a challenger, we got nothing to lose. See, look at it. If all of us are the different brands, I'll have some massive offshore revenue of 10,000 people sitting out here. I cannot make the same statement I'm making out here. Now I got nothing to lose. I will cannibalize my competition because I will build it in another geography. I got nothing to lose. So I've all got to say it. So the larger players in the industry, though what we are talking is nothing new to them, right? But they will not be able to make the shift.
Understood. Thank you, Thompson. Thank you, Sachs. Thanks for your time. Really appreciate this.
Yes,
all the best, sir.
Thank you.
Thank you.
Thank you so much, Chetan. I would ask participants to raise their hands if you have any questions. We have a follow-up question with Vipul. Vipul, please unmute yourself.
So, regarding bottom line, when can the company realistically return to net profit level?
Yeah, see, Vipul, if you look at it, even in our Q1, we spoke about it. We are progressively moving towards, sustained profitability at EBITDA level, at a net profit level, as you rightly said. If you look at this year, we are targeted to be that, and you will see the progress systematically quarter on quarter. With all these current challenges, what we're having, feeding all these multiple babies, we will be profitable. That's the clear commitment we are giving to our shareholders.
At EBITDA level or at net level, sir?
At net level.
Means on yearly basis, are you talking about for March 24?
Yeah, March 24.
And can you comment on margin differential between your legacy services and this new age services, sir?
See, typically our legacy services, because if you look at our revenue mix also, we have a lot of revenues coming from our onshore professional services, which is a relatively lower margin. So it has a skew. But in terms of absolute percentage, in terms of gross margin, if you look at it, the new age services are all 20-25% minimum, what we are targeting, minimum 20-25%. And the legacy ones range between 12 to 14 to 15.
And he's saying that across the globe, average across the globe. Some geographies obviously will be, some geographies will be much higher than that by factor of X in the new age services.
Thanks, Alex. Even for example, thanks for that. Even future tech, if you look at it, margins are as high as even 100%, if you ask me.
Yeah.
So 50% to 100%. But they might be smaller in terms of contribution today. But as they keep growing, it contributes massively to the margin mix change as well.
So all the growth will be coming from new age services, right? And this legacy services will be just bread and butter.
That's right. Yeah, right. See, we cannot avoid. See, in the sense, today, if you look at it, we are not investing huge sales costs there. So the way I will put it is, even if it is delivery-led, business unit-led, they keep expanding, they keep growing. Today, there's healthy competition on the legacy systems with the new age guys as well. But we are investing heavy sales and other pre-sales investments in the new sites. So, of course, as you rightly said, over a period of time, this will probably, become equal to the legacy services.
What should be the capacity utilization for legacy business, sir?
See, capacity utilization, if you look at it, see, fundamentally, as you know, a majority of the contracts, if you look at it, it's anyway people intensive. That's why we call it legacy, right? The moment we add technology, automation, AI, it changes the mix, and the human-human mix changes. I would say the utilization here, it's a tight run shop. It's pretty high if you look at it. Infrastructure assets, if you ask me, definitely there is an opportunity for us to, have better utilization, because as I said, we have invested capacity of real estate and delivery centers. There we can improve. Definitely, we are only around 50% utilization. There is an opportunity for us to, increase the utilization and contribute to our bottom line. That's it's an opportunity. Human resources, human capital, I think we are kind of on the brim, if you look at it. In some areas and some of the minor ones where we could probably improve to a range of around 20% if I look at it. But predominantly the legacy ones are all leveraged till the hilt, the way I look at it.
Okay, sir. Thank you. Yours is a very interesting company. I would request one-to-one meeting if it is possible. I want to understand it deeply.
Yeah. We'd love to. More than happy to.
I'll contact you after this call, sir. Thank you.
Yes. Yeah. Our EY will coordinate that.
Yeah. Thank you, sir.
Thank you.
Sure. We'll coordinate with you people and we can have one-on-one meeting. Thank you so much. I would ask participants to raise their hands for more questions.
Chetan, you have any questions?
No, not really. Thank you, ma'am.
I think almost most of the questions are done. We can close all now.
Yeah.
Maybe Thompson, we
Yes.
can just say some closing remarks.
Thanks a lot. It was, as usual, it's always very exciting to talk to potential investors, and we learn a lot, because all this is a learning exercise, the way the world perceives us. And Chetan, thanks a lot for reminding us and helping us stay grounded, and look forward. Hope you will this time around make a decision to invest in us. Yeah.
Yes, sir. Thank you. We'll be in touch, sir. I'll send you a mail separately, sir. Thank you.
Okay. Thanks a lot, Chetan.
Thank you so much, sir. Thanks for your time.
I am already an investor.
Yes.
Thank you.
I know. Thank you. We will catch up. Yeah.
Yeah. Thank you.
Okay. Thank you.
Thank you so much.
Thank you, everyone. Thank you. Bye.
Thank you. Bye.